This is the moment that we go risk on in the markets. Liquidity is coming from many directions. Let's take a look at a couple of narratives over here. We have the new Fed chair, Kevin Warsh, coming in, and rates are going to go lower, or at least that's what the market is hoping for. Then we look at the Fed. They're injecting 7.6 billion tomorrow, and liquidity is slowly coming back to this. And since QT ended in December, the Fed has pumped $172 billion into the markets. What is that showing us in the markets? The SPX has been hitting all-time highs, showing strength in the tech sector. The Russell also nearing all-time highs. Here's my thoughts. We are looking really bullish right now. And if we continue this particular trend, we could actually be looking at massive upward side. But I do believe there's a little bit of cooling off or even a little bit of downside that we could be expecting in this week or the next before we continue our move up. Let us show you what we mean in this particular episode. Hello everyone, and welcome back to Strategic Markets, your place for technical and fundamental analysis all at once. Now, into our end of week session, the first thing I would like to start off is with Tim Cook, who was the CEO of Apple since 2011. We're looking at 15 years now. He made Apple go from $350 billion to $4 trillion. Don't get me wrong. The finance guy did what he needed to do, and over 15 years, he did a great job for the shareholders of Apple. But it is very clear as to why Tim Cook stepped down. If you look at the tech sector right now, the tech sector is actually moving towards wanting to go in AI. Now, as you know, when products and things are launching within Apple, Apple actually has not prioritized AI for a very long time. Their Siri is still old. I still use it and I don't get the best output from it. Whereas competitors like Samsung, they have their own AI, Google has their Gemini, and they're building fast. So to a certain extent, they have gotten the product guy to come in, fix up, and bring a little bit of Steve Jobs into the image while also focusing on AI. And that is a perfect segment for us to talk about AI. The new Fed chair, Kevin Warsh. Now, the markets are hoping that when he comes in, rates are going lower. Although we can't 100% confirm that, he has said that AI is going to make almost everything cost less, and we're at the front end of a productivity boom. Now, those are pretty good words, and generally speaking, I personally think we do actually have great chances of an AI bubble. Now, obviously, that could hurt us 1 to 2 years down the line, but if the markets really take on that particular narrative, and with a new Fed and also, a little bit of quantitative, I want to say the word quantitative easing coming across into the market with Fed pumping money. And even though they don't say QE just yet started, they are just pumping money into the market with the stocks hitting all-time highs right now. So with these two narratives coming in strong, guys, I actually do see the next couple of months being really bullish for the markets, even though everyone's taking on the narrative, sell in May, go away. But we'll cover a little bit more on this as we continue through the session. Another aspect is oil. Oil seems to be a pain point for everyone right now. You might ask me, Yash, how is it that we could be having such a good bull market when oil is at such highs? And you're right, inflation is really pointing towards oil. And the truth is, if we get a deal with Iran, we could be looking at going back to the $90 instances. But if we don't have a no deal, then in that case, we could be pushing higher over here. And that's exactly what my chart patterns are showing over here. If you look over here, we were in this ascending wedge pattern. We broke down. Now we are creating another ascending wedge pattern. Now, from a probability perspective, generally speaking, and with news that might come out from Trump tomorrow, ascending wedge patterns do break downwards most of the times. I believe the aspect is 66%. But with geopolitics, everything is on the table, and I could see this breaking upwards as well. So just be on the lookout, wait for the confirmation before you seek to take on any trade. But with that being said, right now, there's definitely this. And if this particularly goes down with a new Fed chair, Kevin Warsh, and at the same time, a little bit of quantitative easing happening in the markets, we could be setting up for a very strong narrative. On other topics, Trump has recently canceled his trip to Pakistan for further negotiations with Iran. He's basically saying right now their leadership is fairly confused and they don't even know who's in charge in Iran, which kind of makes sense. When you bomb the crap out of another country and take away their leaders. And he's saying that they have all the cards right now, which also kind of makes sense. Like, the Strait of Hormuz is completely blocked. There's been so many news events, which I'm not going to cover today, where they are basically attacking ships that are moving through the Strait of Hormuz without the US's permission, and they are taking them over and managing them themselves. So right now, yeah, they do have the negotiation card where they control the Strait of Hormuz, and until the right decisions are made and discussions are had, Iran's not going to make money. China is going to struggle. So Trump is just backing off until the right people step up to have those discussions. What is that looking for the SPX and the Russell? Well, actually, Steve is going to go much more into details, but when I just have a look from a perspective, we're touching off support lines. We're going into strength for the S&P 500, and I can still see this room going up, by the way. Also for the Russell over here as well. Steve's going to cover this in more, but we have touched, multi-month prior supports, and Russell actually won't go too much into it, but right now we're holding this particular area and we're moving up from it. So could be bullish, but when we talk about risk on assets, we have to look at Bitcoin. And Bitcoin right now is actually, to me, in the most annoying space it possibly could be, because we have very recently on this weekly chart broken out of this 6 month particular trend line. So, and that could be a reasonable bullish aspect, but we still haven't broken down of this bearish flag. We haven't broken up or broken down from it. So until I get a clean weekly close, now the markets could just pump this into the weekly close and we could have a great week end to it. Then in that case, that would be great and I would absolutely love that. But until we get a weekly close above this particular area, even though we have momentum from this 6 month downtrend, I can't 100% be certain where this bullish narrative goes. And also on the other aspect where I am a little bit bearish, guys, and where I still could see a little bit chop to the sideways, if not a little bit downwards action to test this 74K support line, is we have been green for 4 weeks consistently. Now, if you look at prior times that's happened, yes, in this particular case, in April of 2025, when we went 4 weeks consistently, we had another 3 weeks follow. But until then, there's not many instances in the history of the market where we actually stay green this consistently for this long. So I am, even over here, we had 1, 2, 3, 4, then we had a continuation pattern and a move upwards. So even though it is bullish, you could have just a bit of a week of a sideward action before we break upwards or not. So just have a look out of that. Be a little bit careful. When I look at the liquidation heat map as well, I can see right now that we have liquidity building upwards over here at the 7980K level. That's where the CME gap also corresponds for Bitcoin. So we could actually have that move up, which I'm really grateful for. And for all the spot positions I'm very happy with that. But we do also have some liquidity down over here. And if market makers are really selfish, they can actually push the market down, clean it up, grab the liquidity, and then move back up. So this is where I'm like, if we have been 4 weeks green and bullish, I got to be a little bit conservative, and I can't just sit over here while I'm just gonna, bull market this into heaven. No, I can't just bull speech this. I have to be a little bit pulled back. Also, some other things over here, the Bitcoin Coinbase Premium, which basically means when you're buying Bitcoin on Coinbase, currently has been positive for 17 days, which means you have to pay a little bit extra to buy Bitcoin. So that means a lot of people are buying right now, which generally means that we could mark a local top over here. Like if this continues, great. Like we'll have more buying pressure and it does signal strength in the market, and we have seen that strength for 17 days. But at the end of the day, we just have to be cautious because market's been green for a fairly long time. And another thing that I don't like to point out is that every single time we've had a new Fed chair, such as Janet Yellen, Powell, Jerome Powell's second term, we have in the past, due to some other YouTubers that are discussing this, Benjamin Coward being one of them, is the fact that, in mid-year election sessions, we have had 80 to 70% corrections, even 60% corrections. Now, I believe with the right narratives, such as the QE aspect I discussed earlier, or the aspect of the new Fed chair wanting to drop rates, and possibly oil going down, I do believe the markets could be bullish short term to medium term. But it's not something we can completely ignore that we could have a possible downside as well, if for the short term or long term, just to be something to be cautious of. Okay. But personally speaking, my own thoughts, I don't think this plays out this radically, but I also want to give you all the information so you make the best decision for yourself. And another interesting aspect is, especially for crypto and risk on assets, guys, Trump has basically said that he will sign the Clarity Act, giving regulatory clarity for crypto assets in the American economy. And basically, he's saying that, like in regards to bypassing banking opposition, he wants to sign the Clarity Act and get it sorted because crypto has entered the mainstream. Banking resistance is just unacceptable right now. So if this actually pushes ahead this week by the end of the month of April, because right now we are wanting to get this done by April, so May we can start discussing matters regarding mid-year elections and whatnot, and that's why there's a lot of pressure in this particular space to get this done by the end of April. If this happens, then yeah, the chart of Bitcoin could actually break through this massively, and we could be heading towards real good highs, and that would be great. But just got to be mindful of the fact that we have been 4 weeks green over here, so a little bit of a lull wouldn't also be something that I'm completely ruling out. And lastly is my thoughts on the Bitcoin monthly. This is looking great. We're testing multi-year to months worth of support. We are just breaking out of this particular triangle. We're looking fairly bullish. Over here, we have the 20-month SMA just sitting at about 91K over here. I wouldn't be surprised if all the narratives play out well that we are at about 91K by next month. Obviously, not financial advice there, but I can see a situation where the market could be at that particular price point if these narratives play out. But on that, I will pass it to Steve for his technical analysis and his thoughts.
All right. Well, thank you very much for that, Yash. And I had to have a chuckle when you were basically saying your frustrations in terms of Bitcoin and cryptocurrency trading. But I can wholeheartedly look at these charts and see exactly where these frustrations are really occurring. So let's take a look at the Bitcoin chart right now and have a look and dissect exactly what's going on in relation to those frustrations. You can really see it though, can't you? If I expand this axis, look at this, okay? We have got the price of Bitcoin sandwiched right between short-term moving averages, if you have a look at them on the right-hand side over here, and this 150-day moving average, which is sloping downwards still. You can see it's just tested it, even this week, right? It's hit it, come back down, and now it's just sandwiched right in between all of those areas. That is precisely the main reason in relation to Bitcoin. We've got an improving lagging indicator over here on the Ichimoku. Absolutely. That's a positive sign. We've got the Tenkan Sen, which is that blue line, having crossed over the baseline. Another positive. All of these have crossed over all of the previous resistance lines. All positive in relation to all of these aspects. Without a shadow of a doubt, the lagging indicator could potentially be breaking through the cloud over here as well. Another positive sign. What it all basically needs to do, though, is actually form the break through these areas. So we could have a potential break over the next couple of days even in relation to that breakout through the cloud. Should that occur and you form newer highs past this area, particularly an area past, say, the 79,000 area, you can see that looking across the right-hand side, past the 79,000 area there, getting past that level, you've got a potential breakout without a doubt, okay? But that has to get past the 79,000 level from the left-hand side of the Ichimoku and past that level here being 78.8 in relation to that 150-day moving average. So that's looking at Bitcoin. But like we mentioned in previous videos as well, what's the real anchor that's holding things back? Ethereum. Now,
Mm.
if I expand this here, you can see the problem. All of these previous resistance lines from all of these prior time zones, particularly the January 2022. Clear as day, isn't it? A test here, fail. A test here, fail. A test here, fail. That's three major tests over the past couple of weeks. We're still above the VWAP, being that green line. That's a positive. We're still above the short-term moving averages, being that yellow line and being this cyan line. Absolutely. But if you can't get past all of these resistance areas, you've got trouble. How are we looking in terms of the lagging indicator on the Ichimoku? It can't get past all of these resistance lines either. You noticing that?
Yep.
Okay. Sure, you're getting through a couple of times here in terms of the peaks, but we've got lower highs. We've got a higher low here, okay, but if you've got lower highs and higher lows, you haven't got a trend.
And if it's okay, Steve, I might
Yeah,
just say one thing is that I
absolutely.
think the reason why Ethereum is not showing strength right now is unless what's it called, Bitcoin doesn't decide to break out of its bearish flag, altcoins are actually saying, hey, we're going to stay a little bit conservative over here because we need Bitcoin to make sure that it actually follows through. Because
Absolutely.
last time also in the bearish flag, it touched the top and then it went down. So this could be the same scenario where they're like waiting for Bitcoin to do its thing where and other people are taking rest.
You've got it in one. Absolutely. So
Mm,
that's one major factor. So you've got all of these factors here in terms of your support resistance lines where it's really struggling, but there's also
mhm,
another big factor as well. And you're probably getting where I'm coming from.
mhm,
And that's the Russell. Now, we were talking about this earlier in the week as well, in relation to how things are going in regard to the indices overall. Now, you were right in terms of saying the Russell looks great on a weekly chart. But if we go a little bit deeper into it and we start looking a bit more granularly in relation to having a look at it on the daily chart, this particular week wasn't all that fantastic for the Russell if we compare it to the SPY. So that's the
mhm,
Russell. But if we take a look at the SPY in terms of the top 500 stocks, it was a little bit more bouncing out and forming newer highs, all-time highs again. This is the SPY. It bounced off that short-term moving average and formed a newer high. The
mhm,
Q was even stronger in terms of the technology sector. That really bounced right out nicely, didn't it? Okay,
mhm,
how it went right off that short-term moving average and then went whoop right out and formed a new all-time high. Now, if you go back to the Russell though, it hasn't formed an all-time high at the end of the week. It formed earlier in the week in terms of Tuesday, but it didn't stay there at the end of the week like the SPY and the Qs. It's looking a little bit more like the Dow. Okay, so
mhm,
there's a bit of weakness going on there compared to the SPY and the Qs. This is almost a bit like the anchor when we think about it in terms of Ethereum as well. So if we go back to the Dow Theory aspect, Dow Theory likes to see all four of these indices moving up and creating all-time highs, going really, really strong all the way through. We're not seeing that as strong in relation to all four of these indices at once. So this could also be partially explaining why we're seeing a little bit more weakness into, say, Ethereum and also the altcoins themselves as well too. We had a look through this a little bit earlier today as well too, you and I, Yash, in terms of all the altcoins as well that we regularly review. There's only a couple of altcoins overall that are actually showing some strength, things like Algorand, for instance.
mhm,
So when you're only seeing a couple of altcoins actually showing a little more strength than anything else, those kind of things there are not really pushing the whole market as such really up to a lot of strength and a lot more breadth, so to speak, there as well. Especially when you've got major altcoins like Solana and Dogecoin really pulling things backwards and really dragging the rest of the market with it. So keep all of those kind of things in mind as well. Then on top of that as well, like we were discussing earlier in the week as well, you've still got the bonds themselves doing literally nothing. This is a
mhm,
problem. The bonds market, like we've discussed recently as well, is much larger than the equities market. And if you've got no action here, you've got no institutional drive going behind in terms of, say, like the gas pedal. There's nothing going on with the gas pedal pushing anything along to actually get anything else moving in relation to this market as well. So there's a major issue there. Another thing to keep an eye on is the dollar. Now, have a look at this. We're actually starting to see towards the end of this week a little bit of an actual ascent in relation to the US dollar as well. It's actually looking like it's actually trying to get back up towards this former resistance area now. Very, very fascinating. Now, the more you actually get strength back into the dollar, it's actually more of a riskier environment in relation to the equities market. So that could also be something in terms of people trying to actually maybe even get away from more risk on in terms of the market itself as well. So something else to also keep in mind. And of course, we also have, in terms of something that might actually be a little bit scary towards market participants as well, an ever-increasing thoughts back towards increased Brent crude market as well, because we're actually still back in between these 4-hour support and resistance lines that we've been talking about ever since March. We're smack bang in between these levels yet again. And in terms of the USO, that's starting to edge upwards again once more. So there's a whole heap of factors that are going on overall. And if we also take a look at gold, gold is starting to weaken again as well. It's going below the VWAP and also below the short-term moving averages, and unfortunately for those who are holding gold, below the 100-day moving average, being that white line as well. And it's also looking rather weak in terms of the lagging indicator on the Ichimoku. In terms of silver, very similar situation going on there as well. This was actually looking relatively strong in recent times, but unfortunately, that's really starting to weaken as well, going below a lot of the short-term moving averages, as well as that 100-day moving average being that white line as well too. And that lagging indicator is not looking all that great as well, forming lower highs and lower lows in relation to all of that. And so for that, mate, I'll actually pass it right back to you, because we've had a look at all of those interesting levels, and you can go ahead and conclude for the week.
I agree. Thanks for that, Steve. I would love to be bullish and risk on narrative as much as any of you guys. And with that being said, I think there's very clear signals that if certain narratives play out, we could actually start to be completely on that particular bandwagon. But until then, I got to be a little bit skeptic and say we've had some really good movements and we've had some really strong recoveries. And generally speaking, that can result to some sideways action or even a little bit more of a downward structure to confirm those structures before we continue our move up. So just be careful and just be cautious and position yourself accordingly. But with that being said, thank you so much for joining our session today. If you loved or liked what we did, feel free to drop us a like. Drop us a comment if you do think there's anything we can do differently or you liked something. Please do give us a subscribe if you want to continue on with our journey, and we'd love to have you. But on that, thank you so much for attending this session, and we'll see you in the next one.
See you next time.